Welcome back. Now, business has gone out of its way to partner up with government to contribute to the country's economic growth amidst challenges facing state-owned enterprises like Transnet. Now, amidst Transnet's financial woes impacting vital rail and port services, the private sector emerges as a critical ally in economic recovery, with the Finance Minister, Inokoto pinning hopes on new partnerships. Now, proposed new regulations for partnerships with the private sector have been announced that aim to make it easier for companies to participate. Kotwana said that new financing instruments, including infrastructure bonds and concessional loans, will be introduced. Now, will these be enough to dig failing SOEs out of their hole? Joining us to unpack this and more are business veterans today, Bonang Mohale, who's Chancellor of the University of Free State, CEO at Nedbank, Mike Brown, and CEO at Busa, Coovadia. Good afternoon to you all, and thank you so much for your time today. I'd like us.
Good afternoon. Thanks for having me.
I'd like us to get into the issue of SOEs in a bit, but first, overall sentiments on that budget, considering all the pressures that the Finance Minister had to manage all at once. Mike, we'll start with you.
Yeah, thanks. Look, I mean, first and foremost, a budget is a plan about the future. And certainly I think that this is a decent plan about the future. It demonstrates, in particular, ongoing commitment to slowing the growth in our debt in South Africa, which is 74-75% of GDP. It's an extraordinary amount, and the demonstration to slow the growth in that debt through slower growth in non-interest expenditure, in particular, I think is a commendable message. What, of course, is going to be much more important than the budget itself is our ability to deliver on it, and in particular to deliver that slower growth in non-interest expenditure.
Bonang, your thoughts on this budget?
I'm absolutely aligned with Mike that first, our government has a track record of being ambitious on the GDP growth, and not delivering on those growths, but also very conservative on reducing expenditure, especially the public sector wage bill. So in 30 years, we've always had these conflicting priorities. But for me, overall, first principles, the State of the Nation address is the strategy. It sets the 4 or 5 priorities for the coming year. Therefore, the budget is simply a financial language as to how we are going to execute on that plan. Thank you, Mayor.
And Kaz, we were heard in my intro speaking about the partnerships that we've seen between the state and the private sector. On the back of what we've heard this afternoon, what are the overall sentiments from business?
Yeah, so I think overall I agree with my two colleagues. It's a fairly good budget. The minister does refer to logistics, energy. These are the areas that the private sector is working with the government on. We welcome a clear indication that SOEs will have to open up the space for private sector involvement in actually operating and managing a lot of the areas in energy and logistics, and we welcome that. I think that there's a good 60% of the budget goes towards the social wage, which I think in the current context is a good move, but again, we need to see how this is managed by government and whether we actually see the outputs for this. I think Minister has been very positive and about energy and climate change, and we believe that the allocations to those, the establishment of the climate change response fund and so on are positive. And I think that So generally speaking, I think a very good effort. I think that the asset test obviously is whether the department speaks to this budget. Previously, colleagues in government have actually let the Minister of Finance down, and we hope that doesn't happen again.
A new one this year is certainly the issue of the gold and foreign exchange contingency reserve account. I'm also keen to get thoughts on this. It was polarizing going into this budget, but it looks like we have decided to tap in. Of course, the conditions still need to be set, and I think that will be the real litmus test. But for now, we're going for it. Mike, what are your thoughts on this one?
Yeah, look, I think, perhaps a nice, easy way to think about it is we're a country that unfortunately spends about 5% more than we collect in taxes every year. And that means we have to borrow that additional 5%. And that just keeps racking up in our country's overdraft or debt. And, at the moment, just to give the listeners a sense, I always quote these numbers. In the 2023-24 year, we borrowed as South Africans 553 billion rand. That's what our government borrowed on behalf of us taxpayers who have to pay it back one day. And that's about 2.2 billion rand a day. So in that context, we are spending 5% more than we earn, but we've sort of got a bit of a bonus in our pension pot if you were an individual. And what we're going to do is we're going to take some of this bonus in our pension pot and pay down some of our country's overdraft, which in itself I don't think is a bad idea, but you've got to fix the fundamental problem, which is that we're spending 5% more than we earn. This isn't a long-term fix to that structural problem. That only gets fixed with higher levels of GDP growth. We have to have a country that grows at 3 to 4%, not 1 to 1.5%.
Yeah, but let's talk about growth. I think we saw a number of 1.3% gradually moving towards 1.6%, with a government obviously being more optimistic than many other players or actors. What are your thoughts on this forecast to date?
It's not sustainable that we pay R1 billion a day in interest just to service this debt. It's not sustainable that it's now reaching 75% debt to GDP ratio. It's not sustainable to put a plan that says we are hoping that it will stabilize at about 70%, because in the last 30 years, that number has been going up. And for us, I think it is disappointing that we're not even harvesting the low-hanging fruit. Not one word was uttered by SONA or the budget on tourism. One, because it has the potential to be the greatest forex earner. Number two, because when you build a hotel in Kandla, Mondlo, and Ngutu, you address the questions of township economy, but also youth unemployment. It's not sustainable that when we think of tourism, we think of people going to Wandis or Sakumzis to spend 350 rand on a plate, and yet 10,000 rand a night sleeping in Sandton, 30 years into democracy, when the economy is building by producing goods and services that the world needs. Tourism for us, it's a major thing. And if we compare ourselves with a country that looks like us, Australia, because we're far from everybody, Australia gets twice as many tourists from India, but 10 times more from China. We were doing well in the first 10 years. Our number is only R1 million from India and China, respectively. But in the first 10 years, that number was growing up. Now it's decreasing. We could have banked an extra 9.3 billion rands just in tourism alone from India, not even from China. From China, that number could have been 10 times more, but not even a word. And you can understand why not a word, because in the last 5 years, we have had 4 ministers of tourism. So you can see where the focus is. I'm not even talking about preparing our young people for the future, because NSFAS itself is not even coping. The historical debt sits at 16.5 billion, 9.2 billion of which is irrecoverable. And yet we are not a poor country. We are a middle-income country. Thank you.
Kaz, I want to bring you in here on the issue of growth, and I think, Bonang and Mike both making issue of the tax base isn't increasing, and it doesn't sound like we have a plan to increase our tax base. But my mind tells me that this is what happens when we are in survival mode. Kaz, can you hear me?
Yeah. So, sorry, I didn't realize you were referring to me. So, you're right. I think we are in survival mode. To increase taxes in this environment is not sustainable. I think that businesses and individuals are actually, businesses are just keeping heads above water, keeping their businesses going, making the best they can under the very difficult business conditions. Individuals are under severe strain for a whole range of reasons. So the best way to address our tax base is to broaden that tax base. And the way to do that is to increase growth, get people into jobs so that people are paying tax. And that's got to be the way forward. So I certainly didn't expect any tax hikes in the budget. I think it would have been inappropriate in the current context. But I think that in the work we're doing with government, in the focus on more private sector participation in operating and running and managing some of the critical areas that we are actually weak in logistics, in energy, and so on. And we've seen a significant increase in private sector energy generation in the last year because the environment has been created for that. And so if we go along those lines, we deal with the logistics and the energy problems, I think we can begin to look at how we grow our economy, get investment in, and that addresses the tax base.
I'd like to speak about the issue of infrastructure. It did sound like government has a solid plan. They spoke of a regulatory framework. They spoke of governance and efficiencies, even a new financing instruments. All, I think, are the lovely things that we like to hear. But it also does sound like at present in South Africa, infrastructure investment is concentrated around renewables. And of course, we know that's not the only need that we have here, Mike. And I'm keen just to get your thoughts on this issue of then also attracting the investment, because like both you and Bonang have mentioned, the plans are great, but implementation needs to follow.
Thanks. Look, I think, if we look at the challenges facing our economy and growth right now, a large portion of them are attributable to the collapse in public sector infrastructure. And if you look at many economic forecasts, they would say that electricity and load shedding is currently costing us about 3% of GDP, and logistics arguably more than that, somewhere between 3 and 5%. So I sort of say, let's say they're both costing us 3% of GDP. If we can get them half right, there's another 2% of GDP growth that we could add to the 1.5 that we're currently achieving. So that is why those two particular areas of infrastructure are receiving primary focus. And business certainly, we're well aware that there are other infrastructural challenges, be that water, be that roads, but you have to focus your resources somewhere. And we very firmly believe that those two are our biggest bang for our buck in improving GDP growth.
I also want to speak of the issue of confidence, Bonang, bringing you in here. We know, first of all, that foreign investors are net sellers of our assets. That tells us that our investment case globally isn't quite, meeting our needs. And then we've got a chronic confidence problem. I'm wondering if this budget at all may do anything for our case.
So at least we can say the rand did not tank after the budget speech. But if you do crude arithmetic, if the interest rate is, say, 8% and the inflation is 4%, it stands to reason that GDP growth must be at least at 4% so that you don't stand still. Look at it differently. Our population growth is about 1.5% in the last 10 years. And yet in the budget, we are projecting an anticipated growth maybe of 1.6%. The last 10%, this has been less than 1%, which means you and I are getting progressively poorer in terms of discretionary purchasing power, but also disposable income. Therefore, South Africans are just poorer. In terms of investors are not complicated people. They are looking for regulatory certainty and policy stability. That's all. That shouldn't be too difficult. Just like the rating agencies, they're only looking at 4 things. Number 1 is fiscal. Second is economic. Third is institutional strength. And then lastly is our susceptibility to measure risk events. At the moment, you just need a small flood in KwaZulu-Natal, it wipes off an entire 2 percentage points. So I agree with both my colleagues that things that keep us awake at night at the moment is the 16 years of load shedding, because this economy should be 20% bigger if there was just not load shedding. At stage 6, we lose 4 billion a day. Between stages, it's 500 million rands. Therefore, I think we can't look investors in the eyes with confidence when we have not succeeded in stopping this in the last 16 years. But now we're thinking of watershed. Now we say even the backbone of our economy, which is Transnet, to move goods away from our ports, it's now the third from the bottom. At one instance, 70 ships were queuing just at the Durban port without docking. The things that we wanted to export, especially the perishable goods like our fruits and vegetables, were rotting just at the ports. So I think we are wiping off probably another 2 percentage points by our inaction. So you can see that we've got a tall order in front of us.
Kaz, I want to bring you on the issue of NHI. Organized business was very clear on this. It does sound like NHI isn't getting the attention that we might have anticipated here. But I mean, 1.4 billion rand, I think, has been allocated in that direction. But the finance minister also admitted that there are many things that need, to fall in line before we can get to an implementation there. It doesn't change the fact that the current legislation is very flawed. But I'm keen to get your reaction on that one.
Yeah, so I think we need to be absolutely clear and unequivocal about the NHI. The minister did talk about issues that need to be addressed and tightened up. But the bottom line is that the NHI in its current form has serious constitutional flaws. It has serious funding flaws. The fact that too much money was not allocated to the NHI in that budget is an indication, in our view, from Treasury that they are not clear that they can allocate money, significant amounts of money to the NHI in its current form. So we are absolutely clear that let's not mess around with our health system. This bill is flawed. Send it back to Parliament so that we can all work together to deal with the fraud in the bill and work between the public and private sector to achieve universal health care.
We know that high interest rates do limit household consumption. It's what is the point of high interest rates, Mike. But of course, we're having a conversation about a different age too in South Africa with interest rates possibly falling. Could that support this budget a little bit more than what we're forecasting today?
Yeah, so look, I think, personal view, I think when we are judged over time, there are many, many things that we've done badly as South Africa. But our monetary policy and how the Reserve Bank has managed that through the COVID crisis, I think has been absolutely exemplary, as good as anybody in the world. And, we have seen, thankfully, global inflation looks like, even though it's sticky, it's probably peaked. And South African inflation also probably peaked. I know the print this morning was slightly up, mostly on fuel. But again, materially down from what we saw at the middle of last year. So, certainly our view at Nedbank is that rates will begin to fall in the second half of this year. We've got three cuts in the second half of this year. And certainly a reduction in interest rates should be helpful. I would imagine, because that is a pretty standard forecast, that's probably already what's in the Reserve Bank and National Treasury's forecasting that underpins these numbers already.
Then let's touch also on the issue of new energy vehicles. We know that part of the economy is one of the most robust, where we are seeing real industrialization. But I think also they've asked for incentives to ensure that there is local demand. We didn't see anything of the sorts, but we did hear of, incentives by 2026 or in 2026. I'm wondering if this could be sufficient, Bonang, for the sector to stay put. We do need the sector to keep thriving here in this country.
So electric vehicles are really an opportunity where we can also leapfrog other countries that are much more developed than us. One, because Africa probably has more than 340 days of absolute sunshine, and we're not harnessing it. We even have towns named after being windy cities, but we're not harnessing it. So the renewables, I think that's where we should be focusing on, because it used to have been gifted. But in integrated energy speak, we still export 10 billion of our 30 billion liters of liquid fuels that we need. 20 billion we used to refine here locally through the fine refineries. I exclude Petro SA because in the numbers, it's not that material. Now, all those 4 refineries have now closed. The biggest being Subreft, 180,000 barrels a day. And the smallest is probably now Natref. That's the only one that is still standing. So all of these we have now turned into import terminals. It's not just the loss of jobs, but it also talks to issues of energy security. So for me, I think whether you talk about NHI or you talk about nationalizing the banks, or whether you talk about the more than 734 state-owned enterprises and state-owned companies, the philosophical truism is that where government is failing, it spawns a successful private sector. We see it in private security, we see it in private healthcare, we now see it in private education. The post office offices are actually folding. So in that environment, to then say, help me think. So government owns all the hospitals, including the 26 public universities. They manage them badly. The private sector has now private healthcare, private security, and and they're doing a bloody good job of it. Now you say, I'm going to pass a law that takes the money of the private sector, put it again under public hands, to abuse it, misappropriate it, and steal it, and hope that you're acting the best interest of your citizens. I think it's a long shot. Let me just part with this one. Of the more than 734 SOEs and SOCs, had we just put African women as MDs or CEOs and left them for 5 years without political interference, with 20% of them having failed, today would be looking back at 30,000 African women who know how to run complex industries, because 28 of them are bigger than some African economies. But we're nowhere near that, because clearly greed has been driving the actions and therefore the decisions that we've been making.
Thank you for that, Bonang. Kaz, we don't have much time left, and I think I'd like to just touch on the issue of crime and corruption. We know this is the third work stream that organised business has with government. We've mentioned Transnet, we've mentioned Eskom. Were sufficient resources allocated to this third work stream, which I do believe is possibly the most complicated of the three, just considering the Chinese wall that has to exist there?
Yeah, so the crime and corruption one has been a bit slow in taking off. We now have a joint structure. We looking for the NPA amendment bill to go through Parliament, which will open up space for the private sector on an arm's length basis to put resources into the NPA, which I think the NPA considers a game changer, and I think is. And we've already established a better forensic facility for the country. We piloting in the 101 emergency line in a particular area, and then we jacking that up nationally. So we're making progress. But given the nature of this, it's a more difficult area. There are more sensitive issues to deal with. But I think that if we get that bill passed, we will actually open up a substantial space for the private sector to do more than it's doing now.
I'd like to thank you all for your time, gentlemen. We are unfortunately out of time, but it's been a pleasure hearing from you, also getting your thoughts and insights. That was Bonang Mohale, Chancellor of the University of Free State, Mike Brown, CEO at Nedbank, and Busa CEO at Coovadia.